learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Feel how I feel, then it feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I hope you're having a wonderful weekend. Today, I want to talk about how to grow a small options account and actually keep the profits. So we got a lot of accounts here. This one may look like it's big, but it didn't always start that way. But then we also have another account that we truly did start with 500, and we've also had small accounts here that we've grown and then eventually blown up. And what did we get to learn from that? That is what I want to talk about today, and notice some of the differences, how you could go about trading options and making sure that you actually keep your profits over the long run. So I got a few things that I want to talk about today. I'm going to go over all of these various accounts. We're going to go through some of the trades here, but I really have two important points that if you actually follow could probably change the trajectory of your options trading right now. And on top of that, I also have things that I could be doing better. So I've been documenting all of this, and that's the best part about all of these accounts is that we have done these live, youtube.com/thestockmarket. But you have got to see every single trade on all of these accounts. We even got the long term and everything else, and we've started these at very small amounts, and the point here is being consistent, and this is what I want to focus on in this video, and that is about staying in the game, baby. You've seen a big wave of option trading. A lot of new people have came here. We want to make sure that you guys learn. We don't have any private Discord, anything like that. You could watch all of this. It's all documented. It's all free 99, baby. But the real point is option trading has eaten a lot of people alive. There will be a lot of people will come and go. We want to make sure you stay, and that should be your main goal as well too. So the first thing that I want to go over here is what I like to call the 10 or 20% rule, and we've did this on both of the accounts. So there's something to learn. This is a smaller option trading, but we can apply this same concept even if it's $40,000 or even if we go back to the long-term account, whether it's a big one or a small one. Some of these principles really do come to life and you see the power. So the key about this 10-20 rule, what it even means is that as you go about playing options and as you're acquiring, whether you have a couple $100 or a couple $1,000, you do not ever want to be using 10 or 20% of your available budget in cash. And now, depending on your brokerage, you want to be familiar with margin and how it works, because sometimes if you have your margin turned on, if you're using Robinhood Gold, if you're on TD Ameritrade, they may give you more buying power than actual cash you have. And this has been something that we have talked about a lot on this channel, and that is watching the cash balance. But now how you could apply the 10-20% rule is pretty much you really do not want to have open positions more than 20%, pretty much max of your value. Or if you do want to use more of that cash, you do not want to wait too long. Again, I'm seeing a lot of people focus on the velocity of how they're making money versus kind of keeping it, and that's what I want to talk about here. So if you are moving your money at a faster pace, looking to get faster gains, and you are trading options and you want to put that money out, what I like to do, and this is something that we've did with this whole entire account here, and you could see these are all shares, but what we essentially go about doing, because even once I turn the margin off on this, you will see I'm almost fully invested, and that's something I said, be on the lookout for to watch how it is. But thankfully, I have bought a lot of stock recently. So really how I like to do it and how we've been able to do this, because you've seen us go about this, had about $40,000, and then we had COVID. We hit a nice play. We made $50,000 from 500, and then we slowly start grinding it up. But again, we were able to keep it. We did a bad credit spread play. We were able to recover using rolling over. Then we came into the new year. We got a little bit of the hype with the growth stocks. Then those started to slip, but we are coming up and you are seeing how we are setting higher lows, and there is an overall growth with this account, and it has turned into a pretty decent gain, especially considering where we started. But the main point that we've done and talked about showing live is that we have walked away owning shares. So essentially, as long as I'm buying options, and this is an area even where I can improve the type of options I'm buying, but at the end of the day, win or lose with a lot of these trades, that is something to understand about options. options, there is a lot of losers that is going to happen. But even with a lot of losses, depending on how you are managing your money, you could still take it to the next level and still do very, very well. And how I did that here with this account was I was buying stocks. So pretty much I was only ever using about 20% of the value in options, and I was making sure that I was buying stocks. So simply for some of you guys, you don't have to do anything too crazy. You could go about trading your options, but at the same time, if you were going to start outlaying in options that are very risky, you could diversify by owning the stocks and then trading about 20% of the balance. That has actually proven to keep you in the game for a longer amount of time, or make sure that you are not overexpanding your losses, because that is easy to do. Now, we bring that over here to the other account. This is the random account that we've made. I made a video about this and it really highlights something important, and it's kind of funny too, because this is some of the points I'm making. You may have clicked on this video hoping to learn about, okay, what stock do I buy? What RSI does it have to hit? Do I wait till I buy the dip, or whatever it may be? But this account really shows it doesn't matter the type of play, more so how you are going about playing it. And that is something you really got to think about. If you are trying to build a small options trading account, you are trying to build something. You are not just trying to trade it. So the idea is starting with the littlest amount of possible and growing that to a large amount, and making sure you have the ability now to at least get in the game, play, and grow that and keep that money. So it is not always going to be about what play you make, but more so the types of plays that you're making, and now how often you are playing. So this account with $500, we would literally pick random comments from the YouTube section, and then we would go and make the trade. But we started with $500, but we just made it a strict point over the last year. We are only going to do $100 a week, and we will buy a random play, but we can only trade one time a week. And this has to do with that balance control. So even if I did not go and buy stocks, again, I'm giving you the cheat code right here. We will go over some of these shares and you can see what has happened. We've been able to do a lot of trades on it. This account would even swing. They are big swings, and you could look, a lot of people, it is hit or miss. We've seen a lot of option accounts go up. The question is, are they going to stay there? But even if you do not want to buy shares, that does not seem like the plan you are using, this account highlights a very important point. And that is that you need to control your balance and outlay, and you have to space it out over time. Essentially, you could use any option strategy you want. You could go look at the RSI. You could go about even credit spreads, debit spreads. It does not matter what you're doing. But the question is, do you have a budget, and especially now, a budget every week that you cannot go over? You will hit streaks with options, both winning and losing, and this is how you're going to protect yourself, because now you're going to say, well, I cannot spend more than $500 a week, $200 a week, $2,000, anything, and you could add that on any level. But the point is, win or lose on options, no matter what the streak is, you will be able to ride streaks without getting fully depleted, and even for your morale to keep on going. If you really think about it, when you keep losing and losing and losing, and you're changing the sizes, and now the winner doesn't hit, or now the losers start compiling, that is going to affect you a little bit. Whereas if you know, hey, this is my budget, this is how much I could spend this week, okay, it didn't work this week, we try again next week. It didn't work this week, okay, and you're going, and now it could even help you size your positions a little better. So if you do not have a budget every week or every month of how much you are spending or using to execute any strategy, it will be increasingly more difficult to see a sustainable result. So these are two very simple things that could really change the trajectory. And even as we compare the accounts, this one I would be strict with the budget, but I was not as strict as that TD Ameritrade account that I just showed you. And then even on our other trading account we have, again, we have a lot of these. We are showing different strategies and all that. This one has not been as strict too, and this is where I'm going to show you what we could learn from this one. But then if we even bring it to the long term and then the investing with the shares and all of that, you will see on both accounts here, this has had a strict amount that we are using. And the more strict you are, the less volatility you will have on your own personal account. It is a very simple logic. If you are not controlling how much you're using every week or every month, you will see bigger fluctuations in your account. It is literally the difference between variable and fixed. Think a mortgage, an interest rate, anything of that nature. You are going to be subject to more volatility if you do not have your budget planned out. So putting all of this together, you got these two simple tips. The 10-20 rule, make sure you're not using 10 to 20% of your available capital, or if you are going to be using your capital and want to put it out there, you should be owning at least an equivalent amount in actual equity to kind of balance it out. But I like to go about 80% equity, 20%, 10% in options, depending on what is going on. And that is what we've done through the account, and you get to see results. So that's going to bring us to the next point of what we could learn and what we could do better. At the very least, what I've got to learn from trading these various accounts, especially over one of the most volatile times in a very, very long time, and it's been quite exciting. So the three things that I really got to learn, and when I'm putting all of this together, I say, okay, it starts with budget control and be more specific with a weekly amount that I'm going to be using. There's a lot of opportunities depending on the account. I've been tempted to go for different plays, and you can see it, and even the types of plays. But on the Robinhood in this account, I've been more flexible with how much I've been spending. However, I have been able to balance it out with the first rule. Even though I would be less flexible with the budget, if I was spending more money, I was making sure I was getting more equity and more stocks than I was owning options. At the very least, we could have a giant option portfolio. There could be losses, there could be big losses, but even then, I still am walking away with some pretty big equity positions to kind of balance it out. And then this one has less equity, but then you come to the Robinhood, this one has a ton of equity. Anytime I'm hitting some of these trades, I am walking away with a lot of equity, even in the last 3 months, and it has been a wild ride. You guys have seen a lot of volatility. The growth stocks got clapped recently. Some of the growth came back. Depending on where you were at, it was really a matter of what you had or how much time you got or how you controlled your budget, whether or not you saw this bounce back. But in that 3 months, I made sure that I bought a lot of shares. So the first one is Kodak, and I think we got this one around February 3rd, so this one was a little bit earlier. IBRX. This one was a reverse split from another one. We got the Roblox IPO, that was March. Then we got the IPO in Comp. I believe this one was April 1st. Then we got Clover. I think this one was April 19th. Then GLSI in April 28th, and then the rest are May and June, where we're at right now. But it is, look at the amounts. So we had option trades that we were making, but at the very end, I just got VLDR. This is 10,000 in stock, another 1,400 in stock, another 600. I made this one free the other day. Another 4,000 right there. Another 1,400. Another 1,400. I think Roblox is a little bigger, $5,000. IBRX 1,500, and then another 1,000 or so dollars. So even if I'm going to be trading options on this account now, I do have a lot of equity in it, and that is what we've done over time in building all of this. So even the years before this, anytime we would have big gains, I was making sure I was buying equity, and then we would still go about and find options to trade. But now, this is where it gets better. We would buy some leap options, and some of them held up. Some of them we were able to make them free. I did sell out of some on the last growth, but there is something very, very important here. And you could see I bought a lot of puts. And then when I bring it down to this account, thankfully, if I didn't get equity, I probably would have gotten squashed, but I really did get to see really the silent killer here through all of the accounts, even the Robinhood. Now, it makes sense with this strategy. It's kind of a catch-22 because when you start buying more and more equity, you could kind of see the hedge logic with it, but I bought a lot of puts, and the real killer that I've seen is literally puts. Now, the tip I'm given from this is that usually you're going to be better off at least spending money on calls than puts. What I'm trying to tell you is that it is a lot harder to make money off of puts. It is more likely that you will buy a put and then the stock never comes down versus you kind of buy a call with a decent amount of time, and then what do you see happen? You will watch it come up out of nowhere, and we got to see that happen a few times here already. So when I look at what I've done very, very good, the real thing that has kind of saved me was getting equity. And in some areas, it has been a temporary killer like Spotify and Coin. And this was selling premium, which we're going to talk about. But the real bigger killer where you could see here, we're only down 12% on this account. Granted, it is a larger amount. It's still $30,000, but you go and see where those losses came from. That's going to be a Google put right there. I went big on them. And again, I'm willing to do this. And I did really go and balance it out by owning equity, but that's $10,000 right there. You got another $5,000 on an Alibaba put. So that's $15,000, a Facebook put, another $4,000, that's $20,000 right there. That's 60% of all we lost. So even after everything, all of the equity I've owned, well, that could pretty much come back. But then we keep going down the list. And granted, there is some calls we've lost on, like Big Commerce, that will still be $3,000. And this is why, depending on the budgets you're using or when you're buying them, if you're not controlling the amount that you're doing, sometimes you could just get caught bad in a bad cycle or a bad season, because I'm pretty sure most of these plays all occurred at the same time. So that was in the beginning of the year at January. We see it again on Google. Another one, December. We go to Baba. What do we got here? That's January. Then we go to this September's. This one was May, but this one isn't the bulk of the put there. So I did a little bit of an average down on that one, but then we go to the Facebook puts, beginning of the year, come to the Big Commerce play. You could see here again, November, a little bit early on there. TLT, we grabbed these ones recently, and this one's a little bit smaller, but this play I actually like a little bit more, and you can notice it's nowhere near the size of any of the other ones. But then we got Expedia puts, again, beginning of the year. That's another $2,000. You could go to the Zooms as well. These ones were up and down. We just never took profits on these, but again, beginning of the year. But more often than not, most of the losses were compounded in puts that we got and then puts that you got at a certain time frame or time period. So if you've been watching and playing along, you've probably noticed this, but to make it very clear, I want you guys to be able to see this, because yes, you are going to take losses and you could see the certain types of plays, whereas we've had calls with a certain amount of time, those have actually came back for us. Again, just like the Ubers, just like those workhorses, even these drop boxes, I trimmed these the other day, but these at least had the ability to go up and take advantage of that time, whereas trying to get some of these puts, granted, you can justify it with a certain amount of hedging, but if you end up buying these puts and then don't go about buying the equity, then you will just absorb the losses with the puts. So again, the real saver has been equity, because even though I could spread it out amongst a bunch of puts here, I could still put, this is $120 in just 2 equity positions alone. Now, some people may bring up, well, we don't have that much money. We're trading a smaller account. This is what I'm saying, and you could bring it across the spectrum of any value on the account. That's why the random trade account is so important, because this thing is avoiding puts, but it is also avoiding equity, or we would get puts, but even if we did, we only were able to spend $100 a week. And then the accounts where I see, regardless of the market and what it did, as long as you were building up equity, you were able to see how it played out again on a specific budget. So this is what highlights that 10-20 rule so importantly, because you could see it now. Equity is going to save you, especially if you want to be around. You saw that time period. If you made bad trades from January, November, December till now, and you didn't wind up owning equity or getting either calls that were able to help you, you would have been taking losses and it would not have been good. So that's why moving forward with the rest of the year, whether you're starting now or you've been trading options, you can use these principles to take you a very, very long way. And it really only requires small adjustments and a little bit of discipline. And that's where I'm saying, even what I'm seeing, I'm like, okay, moving forward here, I'm analyzing my own performance. How can I do better? How can we grow these accounts? It doesn't matter what size account you're on, because it really boils down to what sort of percentage are you walking away with? What is going to be the percentage of your money that you're going to be making? And then what is that percentage going to be over time? Again, still being able to make 300% on your money and being able to keep it, that is ideally what we want to do. So you got to find out where you are going wrong and give yourself kind of that little audit, or go look at your budget. Where are your segments and where are you doing good and bad on? And that's where I've got to see here, equity has been the real winner over this last year or this last 6 months. And unfortunately, because we would have wanted them to be hedges, and some of them have time, but you've absorbed more losses going about puts in general. And then if you didn't own any equity, that would have been the dagger in the coffin. But the good part about all of this, if you are able to get your budget in check, you could set about a certain amount. this is how we are going to be going about the next 6 months. There will be opportunities. I think there is going to be market volatility. However, doesn't mean we're not going to get equity, or if we are going to be going about insurance plays, instead of going about it from time to time, it looks like the best way we could do is pretty much set aside X amount of dollars to go out of puts. Otherwise, it could get easy to get carried away and we will not get the results that we want. But if you are growing an account and you want to keep it big or small, equity is going to come into play. Or even if you're going to be buying a lot of options, find a way to balance it out. Watch out for the puts. Watch out for not having a monthly allocation. And now finally, this one is the last one, and it's kind of a catch-22 here, but selling premium. So this has been interesting. We've seen good results in our account with it. That's how we were able to grow it from here to here. But if you are getting in higher risk premium strategies, you may end up clapping yourself, and that's what we've seen a couple times, both on this account and when I come over here to that Spotify play. It was a pretty big trade, but this is even $7,000. So the equity would have actually made up all of the losses for any of the put plays or bad allocations we may have had. But then this is a premium position that has turned into a big loss. Now, thankfully, we played a premium play that turns into options or turns into shares, and then we know how to play those shares, or just like we said, holding that equity, and that's why I'm still holding it, and it's going to open up opportunities. But this is that third segment when I'm looking at growing a small account. Selling premium is going to be an X factor. If you allocate appropriately and don't sell crazy premium and end up actually owning shares, this may be something you could do. You'll learn how to get out of the trade, and that's the best way to do it. If you do sell premium here, you are trying to grow a small account, make sure you are not doing high collateral plays, because your collateral at the end of the day, if you're selling a certain premium and you could turn that collateral to be able to hold the stock, you will be better off. But then at the same time, now, not doing premium, I could be doing a lot more premium selling on this account. This could also add to that buffer and make sure that if you're not getting good plays in here, oh, look, this is another put too. If you're not getting any good plays in here, what you could really be able to do here is slowly get some high probability plays to just give yourself a couple $100 every week that could compound. But granted too, we have also seen big put premium selling losses, and this depends. If you sell credit spreads, if you're selling premium, high collateral plays are usually going to have higher risk if you cannot afford them. Thankfully, this is how I've been able to get out of it, because I've had a bigger account. So if you do not have a small account, make sure you're watching the real risk to reward. You are still going to go at a slower pace, but do not put out really collateral that you can't afford or is going to end up being more than 80% of the capital that you have. So I hope these all help. Again, you may have been seeing some bigger accounts, but the key is we started all of these accounts small. Whether it was $500,000, $10,000, $20,000, this Robinhood was at $40,000 when we began. Really, before we even saw anything crazy, it was in the 30s. And even this one you see here, we had about $12,000 at the beginning of 2020 when we made this. And we did make a deposit for some of the equity, but overall, these have all been small accounts that we have grown. And the key is here, I know you can find ways to grow it. You see the market, but are you going to keep it? That is what we want. So I hope this helps. Hopefully we see you guys on stream. If you have any questions, post them below. Drop your thumbs up on the video, all that good stuff. I should have said that at the beginning, but God bless you. We will see you on the stream, and I'll see you on the watch list tomorrow, baby. Let's go.